Thursday, April 13th. It's just after 11 in the morning, and here's how I trade using my Taylor Trading Technique Calculator, together with my 6 trade setups: GST, TMC, gap, support and resistance, time and price, trend, momentum and candlesticks, and stochastics, together with the previous day's close. Here's the logic. First of all, I always put the previous day's close and the Taylor trading zone, the resistance and support, as you can see here, drawn in the rectangle. And I start the rectangle at 9:30 a.m. and I end it at 4 p.m. So here are my rules. First of all, I look to see if the gap is going to be closed. The market opened gap up right about at 41.30. The gap was down at 41.20, and prices came as close as 41.24. So it came within 4 points of closing the gap. That's close enough to be considered the gap being closed. So then what happened next? The morning, when the market opens, is the time of greatest uncertainty. And we notice that the volatility here spans about 10 points. There's 8 points between each horizontal line on this chart. So as you can see on this 3-minute chart, each candle spans about 10 points. And so the morning we see the volatility, and morning time is the time of greatest volatility, and I look always for the gap trade because that is the only more than likely trade to be seen in the morning. And then what happens next? As the day went on, prices didn't come close to the gap again, and prices shot up 20 points, up to 41, 42, 41, 43, toward the midpoint of this consolidation here. And so now there's another mindset that I employ. I see that prices are trading well within the Taylor calculated trading zone, and stochastics are in no man's land down here on a 3-minute candle. So I don't want to go to the high. I don't want to go to the low. I want to wait to see what happens. Now, my thinking is prices moved up 20 points here, and they're going to consolidate, and if the time and price trade holds, prices should move another 20 points up in the same direction. So 41.60, around there, 41.60. So prices could reasonably trade up at 41.60 as the high of the day. Certainly, if that's the case, prices will most likely hesitate at the calculated resistance at 41.56. Nevertheless, if prices again trade above this level at 41.46, I'm going to jump on. I'm going to also wait for the stochastics to be oversold because I don't want to jump on where prices are consolidating and they're in a no man's land. They could still go down. Prices could meet this 41.47 level, 41.46 level, and continue backing off and actually even go down and close the gap. But nevertheless, this would be a point of decision at 41.46. Also, 41.39, this would be a point of decision. Ideally, if the prices reach down here and stochastics is oversold, I want to get on over here if they retreat back up from 41.38. Now, over the last several candles, we see the candles are struggling to make it down to 41.40. So that means prices are likely to continue their upward momentum. Now, I'm going to see if prices are oversold, and if so, with the stochastics being my guide, I'm going to get on again. Now, the most important thing here is I see prices are obeying the Taylor trading zone, and I always calculate Taylor. Here's my Taylor calculator, and this calculator is invaluable. It's worth its weight in gold, my friends. And if you would like the Taylor calculator to try it out for yourself, I make it available to you. You can use it I use it for the ES, but you can use it for any market that you want to trade. You can use it for the ES, the NQ. You can use it to trade stocks. You can use it to trade virtually any market, and that's because all markets trade the same. And Taylor was a genius in figuring out this calculator. Actually, I figured out the formulas. He doesn't divulge the formulas. It took me a long time to figure it out. And if you've ever read Taylor's book, you know that the formulas are nearly impossible, and his writing is very difficult to understand. But basically, if you want this Taylor calculator, go to my site at timelessdollar.com, and there's a link down here below, or up in Trading Resources, Taylor Trading Calculator. Click either of those links and they'll take you to a page where you can purchase the Taylor Calculator. You can try it for 2 weeks. If you don't agree that it is the best thing to having a crystal ball for day traders, you can simply return it, get your money back, and we're still friends. So that's how I trade. That's how I see the day. And prices again are moving up toward the center of the consolidation area. If they break above 41.47, I will jump on again. If they go down where stochastics is oversold, I will jump on again. And if prices do not clear this 41.47 area, I will get off for a small loss. So that's my thinking. But nevertheless, I would assume, based on the time and price trade over here of 20 points, I would assume that after consolidation, we'll see another 20-point rise. Certainly a hesitation at the 41.56 Taylor resistance level, and we'll see how the day progresses from there. Okay, now I've fast forwarded. It is just after 1:30 in the afternoon, and as you can see, the market has risen up to the top of Taylor's resistance line at 41.56 and hesitated around there, bounced around there for a half an hour. I've closed my position. I did get on at 41.44, and as I said, prices are likely to go up to 41.64 based on the time and price trade being 20 points additional. But there's even more, I think, based on transposing Taylor. Have a nice day. Trade safely. Thanks so much for watching, and I'll see you in my next video.